Hello and welcome to this episode of Why Not Mint Money. In our personal finance section, we have regularly talked about the benefits of keeping a good credit score and also ways to improve it. But recently, we came across an interesting case of a borrower. She wanted to transfer her home loan from a private lender to SBI. Apart from the extensive paperwork which SBI had demanded, they also asked for her investment details. The bank wanted to know her existing savings and how much she continues to invest. It was surprising. Lenders don't usually evaluate a loan application based on borrower's investment. SBI told her that the bank will grade her on the basis of her investments. But this does not result in her getting a better rate. The relationship between lenders and borrowers have been quite lopsided. Lenders want to get the best borrowers, but they don't want to reward someone who has maintained excellent financial discipline with better rates. It reminds me of an old joke. In India, you have to show that you don't need a loan to be able to take one. I am Dinesh Bhasin from Mint's personal finance team. We explored the lenders who are rewarding customers for keeping a good credit score. And in this episode, we will tell you where can you get the best rates if you have a great credit score. After Reserve Bank of India has asked lenders to link their retail loans to an external benchmark, many government banks have started giving better rates to those who have a high credit score. In fact, these government banks differentiate customers on the basis of their credit score. The borrower with a CIBIL score of over 771 gets the cheapest rate. For a home loan, the rate is 8.15%. The second category is of customers who have a score between 726 and 771. The third bucket is of customers with a score between 701 and 726. Finally, the fourth category comprises of those who have a score between 650 and 701. The difference between the first and the last bucket can be up to 1 percentage point. A few public sector banks have started adopting the same approach. Some of these include Syndicate Bank, Union Bank of India, and Canara Bank. Private banks and NBFCs, on the other hand, are yet to start rewarding customers for their high scores. The problem is, the private sector banks already take customers who have a high credit score, so they can't differentiate. NBFCs, on the other hand, cater to customers who don't have a good credit score, and typically banks are not lending to them. However, both private banks and NBFCs are giving unsecured loans on the basis of credit score. But slowly, private sector lenders are also getting there. They have started differentiating the customers on the basis of credit score for their unsecured loans. A person with a credit score of 800 or more would get charged between 11% to 16% for a personal loan, whereas a person with a credit score of 650 will be charged 18 to 36%. You must be wondering why banks don't differentiate customers when it comes to credit card on the basis of their credit score. After all, the interest rate on credit cards are above 40%. But in case of credit cards, the credit scores don't matter. Credit cards compete on rewards because in India, they are mostly used as a payment tool and not as a credit tool. With fintech companies disrupting the financial space, the use of credit score is widening. Take example of telecom operators. They use the credit score to decide on the credit limit of the customer. Insurers are using credit score to decide whether to give a high value policy to a customer or not. Many companies such as online shopping platform and cab aggregators are using the credit score to offer pay later facility to their customers. In fact, these days even employers check your credit score before taking you on board. So what does all this tell you? If you have a good credit score, then approach a public sector banks to get the best deal. That's all from this episode of Why Not Mint Money. Thanks for tuning in.